Watch it like 2 times. Fire. Yeah, when you go see it again, it's kind of like what I said yesterday. Once you see the pattern, it's kind of impossible for you to unsee it. It's just the same thing, repetition. Bro, it's fire, so clean. Watched it 3 times. That's fire. All right, we're gonna get right into it. So going over yesterday's again, I'm gonna try my best, my 100% best to get as much content as I can within these days. So let me just put you guys over here. All right, perfect. It was more clear. I cannot get clear the high, higher, low. All right, perfect. All right, so what we're gonna do right now is we're just gonna pretty much recap on yesterday's analysis. So we'll start off with AUD JPY. So you guys already know AUD JPY, we are bullish. I mean, we're bearish on the weekly. Everything remains the same there. We are bearish on the daily. Everything remains bearish there. As you can see, we have lower low, lower high, lower low, lower high. And then on the 4-hour, the 4-hour is technically bearish. Can any of you guys point out where is the shift that this went from bullish to bearish? If you guys can see it, just type 1. If you guys can't see it, just type 2. I want to see. Okay, fire. Yeah, by the way, I have you guys over here on this other screen. Okay, so some of you guys see it, the majority of you guys see it. So I'm going to point it out. And then for those of you guys that said 1, I want to see if, hold yourself accountable if you guys were right. So this market right here, it was bearish. So as you can see here, right here, it was lower low. That's the lower high. So again, anything in between these 2 lines, we are still bearish. So this would be the lower high. And then this would be the lower low. Do we all agree with that? Type 1 if yes, type 2 if no. All right, perfect. So the moment we break under, which would pretty much be this point right here, is where this lower low would move. So now I'm going to ask you guys, would you guys count this right here as an elbow, yes or no? Perfect. Okay. This is good. A couple mixed answers. So ideally, do the snake tactic. You get the little snake, you draw it down, and then if you notice, it really isn't that sharp of a turn, let's say, compared to this one. And if you notice, they're pretty much the same candlesticks. They're literally the same exact 2 candlestick retracement, but it just doesn't look like a clean elbow. Again, we want to have something like this. We want to look for any of these points that look like an elbow. All of these elbow points right here are going to be the market structure. This is going to be what's gonna tell you where the lower high and lower low is. So once this body closed under, this is going as the lower high. And then the lower low would move all the way to this point right here. So then what happens once this body candlestick closes under? This now moves to the new lower low. And then again, you can't have a lower low without a lower high. So then this point right here would be the lower high. The moment we body close above, we are now bullish. So it would make this the higher high right here. So this point right here would be the higher high, making this the higher low. You can't know where the higher low is. If you mark this off as the higher high, the little snake tactic, you notice the sharp turn. So then this right here would be the higher low. So then if you notice right here, everything and within these points are just structure. We body closed above, making this the higher high point. So if this moves as the higher high, we follow the little snake tactic. This now turns into the higher low. So we now move this to a higher low. And again, anything in between these 2 points, we remain bullish. And look at the moment we body closed under the line. Now this turns into the lower low. And then this is now the lower high. You guys are seeing the importance of that. What'd you guys think of that? For those of you that said 1, did you guys mark it off like that? Or no, did you guys have it a different way? Turns the way. Not like that, a different way. Okay, but you guys are seeing the importance of marking off the structure points. This is so crazy how it goes bearish. Yep. And the beauty of this is it's literally straight to the point. Like there's no ifs, ands. Like there's the only way to make a mistake is if you don't mark off the structure points correctly. If you mark off the structure points correctly, it's pretty much impossible to be wrong, whether it's bullish or bearish. That's why it's so important to know how to point out these structure points the right way. No, the wicks don't matter. We do everything directly to the lines. And what a coincidence, as soon as we go bearish, what are we creating right now? A potential left head and then a right shoulder where it's going to give us obviously the push to the downside, right? So I'm in this trade right now. If you guys want to get into this trade, pretty much free trade because you guys are right around my same entry signal. I would build out the full confidences on why I'm in this trade, but I kind of don't want to get there yet because I feel like I would confuse you guys and just get ahead of it. We'll get into it in the next couple of days, but I think this trade is pretty solid. You know, we're rejecting a strong level of support, using it as resistance now. The most ideal thing is for tomorrow to be a bearish engulfing, and then the next day we'll have a wick pullback and then hopefully continue heading to the downside. And if it doesn't do that and the body closes above, bet, cool, easy. Now we wait for a little retracement here to go long. Literally do the exact same thing we did here. If we're under, we try to get into some sells. If sells don't play out, you look for the buys above. That's the importance of knowing how to find these areas of interest the right way. And that we'll get into, I think, on our 4th day. So if you guys are with me right now, type 1. If you guys want me to go over some things, type 2. Okay, perfect. So we got the majority with 1s. All right, fire. All right, so this video, I mean, we're going to be going over this right here, right? So I want you guys to understand. Let's actually take this, or let's leave this here. We'll just copy and paste it. So I want you guys to understand. Where is it going? Oh, right here. So we'll zoom in over here. All right, so we need to understand where we are within these markets, right? Obviously, we know that all of these time frames are to the downside. So just so you guys get a more visualization representation, we'll do this. We know all of these markets are to the downside. Yes, the ideal thing is you're going to be looking for sells because everything is selling, but you got to know where you are within the market. Are you at a high of the low? Are you at the low of the low? Are you in the middle of the low? Where are you within the move, right? So for this example, just because I feel like it's easier, we're going to flip it around to bullish, and then we can touch up on it when we are bearish. We can do both sides. So for this case, we're going to visualize it as bullish. So we're going to just flip everything around. I personally think buys are better because, you know, when you make money, you think about plus. So going up usually is plus. It's like this huge psychological factor. But then there's this other thing where I don't know, I just read this in a book. That's why I'm like saying it, that some people are better at selling because they think gravity is going to pull the chart down faster. It's straight like bullshit. It doesn't really matter. It's the same thing for either sides. So for this example, I'm going to be showing you guys the difference between these 3 charts and how to properly identify where we are within them, right? So we're going to create our little cross grid, whatever. And then this time frame right here is going to be the weekly time frame. This right here is going to be the daily time frame. And then this is going to be the 4-hour, right? So as of right now, we are bullish on the weekly time frame. So this is how we look on the weekly. This is how we look on the daily time frame. And then this is how we look on the 4-hour time frame. Let me just draw this out 1 second. You guys are with me? Type 1 if it makes sense. type 2 if no. All right, bet. So again, 100% mandatory. Mandatory. You guys need to get this grid line and you need to draw a higher high, and then you need to get your higher low. You need to do this on all time frames. You guys are going to see why in just a second, right? So from yesterday's example, this is what we would be doing right now. We'd be doing a higher low, higher high, higher low, higher high. So this would be right here, and this would be right here. So for the weekly time frame, we know anything in between these two lines, we remain bullish. For the daily time frames, anything in between these two lines we remain bullish, and for the 4 hour, anything in between these two lines we remain bullish for each time frame. Yeah, we only do weekly, daily, 4 hour to understand the trend. Every other time frame is for entry signals. You watched yesterday's video, literally explains that to the T. So this is my rule number 1. My rule number 2, it's gonna be must buy or sell at a daily or weekly area of interest. Take a screenshot, get a tattoo of it, put it on your dog's collar, do whatever you got to do. This is rule number 2. You must buy at a daily or weekly area of interest for your ideal. Let me add that in there. For your ideal swing/day trade. You can obviously take the same approach down to the 4 hour, 1 hour for your ideal intraday or scalp, just to get it clear. But I'm going to show you guys on the weekly example, and I'll flip it around the time frame, that it's literally the same thing. That's why the way that I trade, you can literally do anything, trade any market, you can pretty much do everything you want. So you must buy or sell at a weekly or daily area of interest. For this example, let's say this is our weekly area of interest. We all understand in order for you to buy a trade, you must have a higher low to go long. We all agree with that, right? We understand we can't buy at this point right here. It's pretty much, I don't want to say pointless, but let's say you do take the buy right here. Where are you going to put the stop? All the way down here? That makes no sense. You wait for price to come to your area of interest, which would be here, and then you adjust your stop loss to that point. That makes sense, type 1. If it doesn't, type 2. This is just basic. This is basic. We're not going to get into risk to reward. We're not going to get into everything. Our boy over here, I don't know your name, man, but I'm seeing your facial reactions, bro. You're tripping. I'm seeing you. All right, so let's say this were to be your higher low point. So we're waiting for price to come into here. Oh shit, the Wi-Fi. Okay, never mind, we're good. All right, so we're waiting for price to come into here to have a higher low to create a higher high. So if we need this to come into this area and create a higher low, this same exact area of interest, I'm just going to copy and paste the box, this right here. This box, this would be the higher low, how it looks on the daily. And this is how the higher low would look on the 4 hour. It's the same exact zone. It's the same exact move. Everything is the same. All we're doing whenever we go to this other time frame is we're just zooming in from the weekly. We're zooming into the daily. We're zooming into the 4 hour. So we need price to come into here in order to go to the upside. We need price to come into here in order to go to the upside. We need price to come into here in order to go to the upside. Type 1 if you guys are with me so far, type 2 if no. Perfect, perfect. All right, so we're getting 90% ones. Okay, perfect. Yeah, what's your question, Aris? What's your question? As of right now, does anybody have any questions? Even though, could you define what an area of interest is? Yeah, we'll get into area of interest tomorrow. Just in order for you to find an area of interest, you first got to understand how the structure of the market works. So basically, area of interest is just the area where you're looking to buy. But we'll touch up on that tomorrow. But before we get into that, you got to understand the market structure. And that's what I want you guys to get before that. Yeah, we'll talk about that the last day, Derek. Why is the area of interest on the weekly? Because for this example, we're going to be buying at a weekly area of interest. Is there any session you don't trade? I mean, the most sessions I do trade is London and New York. Any other session is not the ideal thing to trade. The best analogy I could come up with that, I mean, I don't know what analogy, but it's like there's no movement, no reason. Like let's say your job is to sell stuff when there's a lot of traffic, let's say at the mall. You're not going to really be out there on a Monday at 7 in the morning. There's nobody in the mall at that time. You want to go to the mall when there's more people, so you sell more. It's the same thing. There's a lot of movement, London and New York. There's no movement outside of that, so there's no point to trade those time frames. All right, perfect. So we understand that in order for us to take our day trade or swing trade, we need to come to this area to go to the upside. We need to come to this area to go to the upside. We need to come to this area to go to the upside. So what needs to happen in order for price to get to this area to go to the upside? Well, the daily and the 4-hour need to go bearish. So this is the first thing that happens, and this is what can throw a lot of people off, because this right now, everybody can be ready to buy because everything is bullish, but I don't think you guys understand. We're buying at the highest point of the move. You don't want to buy at the highest point of the move. You want to buy right here. You want to buy at the higher low. You don't want to buy at the higher high. So in this case, while we're waiting for the higher low, you can day trade this to the downside. Once it gets here, you get the overall swing trade. You got to understand where you are. So in this example, we are at the highest points of the trade. So the most ideal thing is to not look for buys because you're at the highest point of the move. You understand that price now needs a retracement to go to the upside. So in order for that retracement, the first time frame to go bearish is going to be the 4-hour. So now the 4-hour has broken structure. So now this is going to be lower low. This is now going to be lower high. So now the 4-hour is going to shift bearish. Now you have a 20% towards your buy versus 10% towards your sell. So again, you can't take a buy yet because you're not at your area of interest to take the buy. If you guys are with me, type 1. If you guys aren't with me, type 2. Fire. Okay, perfect. So what happens on the daily? This little red move on the daily, it'll look probably like something like this, where we are still bearish. I mean, where we are still bullish on the daily. So now the 4-hour pretty much trickles a little bit more. And again, same thing that happens with every other time frame. You need to have a little retracement. So this retracement right here will make a 4-hour potential lower high. On the daily, what this will do is something like this. Again, we're still bullish on the daily. And now the 4-hour pretty much creates a new lower low. We keep adjusting our stuff. We're still not looking for anything. Now we understand where we are in the move. So now if you notice, the daily has now gone bearish. So now the daily goes here. We put a lower low. We put a lower high. And on the weekly time frame, all of this just looks like this. We're literally just we're just pulling back on the weekly. But in order for the weekly to have the pullback to this level, you need to have the shift. These time frames need to shift in order to get there. So this is where you tell yourself, but this looks pretty cool. Now you can have the daily bearish and then the 4-hour bearish. So now this is 20% towards your sell. And keep in mind that we are overall looking for the weekly buy. So you got to keep in mind where you're looking to sell. So the daily time frame, we have a lower low. Everything that has a lower low needs a lower high to sell. What a coincidence. We're coming into an area of interest, support, resistance, so on and so forth. On the 4-hour, it's going to look something like this. And if you were to take a little day trade here to the downside, you can have your stop loss placed wherever, but your take profit needs to be taken out at this level because this is the level where we're looking to buy on the weekly. Again, this is all very standard. Just want you guys to understand where we are within the move because there's a follow-up thing with after. So why is this so easy? I mean, it's easy now, but what do you guys think so far? Are you guys with me? Am I going too fast? Am I going too slow? How do you guys see everything? Again, we're only like 25% into this. Has this been like, was this clear before, or you guys got all of this before? This is Chinese before, now makes sense. Very clear, solid. All right, perfect. Too far. All right, cool. So now we understand that, again, the 4 hour is doing all of this stuff. So now here we have a lower low. So this now creates this lower low. And again, this isn't going to look like this because the 4 hour moves a lot more than the daily. So this would have moved like this, where it would be a lot more bears. So let's say this would be like this. This would be like this. So this would be the new lower low. This would be the lower high point here. We just created a lower low. So now again, the daily has to come back up, do another lower high. And then this is where the 4 hour can possibly shift to bullish in order for the daily to have the retracement to create the lower low. Does that make sense? You guys get that? What do you guys think of that? It's very simple. It's just purely market structure. So in order for the daily to have this lower high, the 4 hour had to go bullish. So this move right here, this is this right here. This exact same move is this right here. And if you notice, this blue candlestick is this on the daily. But this is just how it looks on these time frames, basically, when you zoom in and you look at the structure from those time frames, right? So the 4 hours bullish, whatever. And now we've approached the area of interest on the weekly time frame. And now we've approached the area of interest on the weekly time frame. So this would look something like this. This would do something like this. Now we've gotten to our area of interest, making this a lower low, making this a lower high, and on the weekly time frame, we're like this. So do you guys got everything up to now? Type 1 if yes, type 2 if no. All right, perfect. So if you guys noticed, within the whole entire move, without even knowing it, you guys know exactly where we are within the market. Are we on our way to the area of interest? Are we almost there? Are we halfway there? You know everything because you got the full top-down analysis. You understand that we're halfway into our retracement. So this pullback right here is literally this same exact move. And then everything that happened in here is the same exact move. You're just moving in. So you know exactly where you are within the move, which is where I feel like a lot of people get confused, because when the market shifts bullish right here, for some reason, people are like, oh shit, now I see a inverted head and shoulders. I'm going to look for the buy. I'm like, wait, you're not even looking at the overall picture. We are still halfway from this point to the area where we should actually be buying. And then the daily is still bearish. So you're just going a buy based off of one time frame, one structure. Can you have weekly area of interest, daily area of interest? How do you trade both? So area of interest is going to be next class. Everything is area interest wise is going to be next class. This is just first to get you guys into the structure. I want you guys to understand how it goes from bullish to bearish and why it goes bullish to bearish and where you are. How long you need to analyze this? You see it. Yeah. So I probably analyze all of this in 1 minute, 30 seconds. It's just like I said, like once you see it, you pretty much can't unsee it. It's just a pattern that you see over and over again, right? So as of right now, if you guys are with me so far, just type 1, type 2 if not. Okay, fire. Okay, perfect. So we have something called 1, 2, or 3. So let's say this were to be our weekly time frame bullish, and this would be our area of interest. And for a swing trade or an intraday trade, day trade, whatever you want to call it, let's just say for long trade. So in order for us to go long on this trade, what do we need? What do we need in order for us to go long on this trade? Correct, correct, correct. Exactly. We need, correct, a pullback into this area to go long, right? Let's say we're looking for a sell. This would be a sell, and then this would be the area. What do we need in order for us to get the sell? Perfect. Perfect. So we would need a pullback to this level to sell. It's the same thing, you just flip the chart. But you got to know where you are within this push right here. So we have things that are called 1, 2, or 3. It's very simple. They each have their own explanation, right? So 1 is going to be higher high or just not interested. 2 means on the way, and then 3 means at area of interest. So this right here would be categorized as one. Yeah, it's recording. Yeah, appreciate it. All right, so this right here would be categorized as higher high or 1. So we get on this chart, I ask you, is this bullish or bearish? You say this is bullish, and it's 1 because we're at a higher high. So let's say this pair would be like this. I would be like, all right, this pair is bullish because obviously this is our higher high. This would be our higher high, and then this would be our higher low over here. So we know we are bullish, and then this would be categorized as 2 because we are on the way to our area of interest. And then once price is at 3, that means that you are now at your area of interest. So you know the whole entire time, where are you within the move? You know if you're looking to buy yet, or if you're on the way, you can pretty much look for some sell trades from here to here, or you just don't look for any sell trades, you just wait for the trade to here and then take the buy. So what do you guys think of this? Type 1 if it's clear, type 2 if no. What do you guys think of this? Like when I showed this in the 30-day bootcamp, people like tripped out. It's so fire. Is it clear? Do you guys want me to touch it over? Very clear. Will this rank into the trade? Yeah, it goes into the trade. I'm tripping right now. I see you, FX. I see you, bro. All right, so I'm gonna do it again, but now on the sell side, right? So let's say this would be your sell. Let's say you'd have lower, lower, lower high. So this would be your lower high right here. And then this would be your lower high. And then this right here would be your lower low. So this would be our area of interest. Again, area of interest is tomorrow. What time frame is this? This could be weekly, daily, doesn't really matter. It's the area that you're looking to buy. So this can either be for me, the weekly or daily or 4-hour, whatever time frame I consider that if I want to take a swing trade, it's going to be on the weekly. If I want to take a day trade, it's going to be on the daily. It's going to be a scalp intraday trade. It's going to be on the 4-hour. It's very simple. But again, all of these things are for next classes. Or if you guys joined the guided bootcamp, it's a lot more detailed. I'm literally trying my best to make it as efficient within these days. And I feel like it's the best that I've ever done it. So if this right here, what would you guys categorize this? Would this be bearish or bullish? What would this be right here? Okay. And then if it's bearish, is it 1, 2, or 3? Exactly. Exactly. It's a 1 because we're technically at for this case, it would be a lower low. We're at the lowest point. And you cannot sell at a lower low. It's pretty much impossible. It makes no sense. So what would you categorize this trade right here? Is this now bullish? Is this trade bullish or is it still bearish? Correct, correct, correct. Exactly. So it is still bearish. And then we are on the way to our area of interest, which would be here. So then the next point would be 3, which is where at our area of interest, right? So is everything clear with this? Super simple, very clear, self-explanatory. It's very, very, very simple. I'm telling you, like once you guys see it, it's kind of impossible to not see it, right? So I'm going to show you guys how trippy this is once we go now to AUD/JPY. So what would you guys categorize AUD/JPY right now? Tell me how clear it doesn't look right now. Tell me, does it look super simple, like straight to the point? If you guys notice, exactly, this right now is technically bearish because we have lower low, lower high. And then I would personally categorize this as 3 because we've already reached our area of interest and then rejected. It would technically be 2 if we hadn't reached it in the past, but those wicks reached the area of interest. You just have to look at it on the lower time frames. But for example, let's say you were to call this trade right here. Let's say it were to be this trade. Let's say you were to do something like this. As of right now, you would just pretty much mark nothing. So if you notice we body closed above, then you would put here higher high. And then you would put here, well, let me do it right here, higher low, right? Type 1 if this is clear, if this makes sense. All right, perfect. So the most ideal area of interest would be this point right here, would be this previous structure point, right? It's just very textbook, break retest to go to the upside. All right, we gotta wait for that. Is this right now 1, 2, or 3? Okay, I see a little bit of you guys. Okay. So yeah, this is right now is 1 because we're at the high. We're not on our way, nothing. This right now can literally just do this. So we're definitely not 2 or 3. So if you wait for the next candlestick, where are we now? Are we 1, 2, or 3? Exactly. So it would be a solid mix of a 2, 3, mainly 3, because we're at the area of interest already. So now this is where you would go down to lower time frames, look for shift of structure, so on and so forth, and then beautiful, right? So this would have been very simple buy trade, but just easy by categorizing your areas of interest. And then the beauty of it, because let's say you would call this your higher high, and then you would call this your higher low. Let's say this would be your area of interest right here. If it completely violates and breaks through your area of interest, you're good. You're no longer looking at this trade. You simply move on to another one. So this is the importance of understanding whether we're bullish or bearish, right? So I'm going to test some of you guys with some examples right now. So let's say this would be this. Let's say this would be, not really, it's not a good example. All right, so let's say this one. And this example right here, are we bullish or bearish? Jesus, that's going to be for the last classes, literally like the last class. All right, correct. So this market, we are obviously bullish to the upside. So if this were to be our higher low and this were to be our higher high, we would mark this off as our area of interest, meaning I'm looking to buy once price comes into this level. From here, I'm looking to buy. So would this be 1, 2, or 3? Correct. It's not a 1 because we're not at the highest point. It's not a 3 because we're not at the area. So it'd be a 2 because we're on the way. Now, yes, this can have a bullish engulfing. This can have everything it wants here, but I'm good. This is not my trade. I only look to trade at my area of interest. If you notice, this trade right here would have played out. Let's say this were to be the higher high, and this were to be the higher low. This would have been our area of interest right here. Perfect break, retest, head to the upside area of it. Like it's literally that simple. Now, can this trade from here do this? For sure, 100%. Not 100% that it's going to do it, but 100% it can do it. So now, am I going to completely shift my strategy and now move my area of interest up a little bit? So no, I'm not going to do that. That's not part of my trading plan, not my trade. I move on to another market. That's why I have several different markets. You guys are seeing the importance of sticking to a plan and sticking to a checklist. Type 1 if yes, type 2 if no. Or if you guys were to see the chat right now. Okay. So everything as of right now is clear. You guys get everything right now. Type 1 if yes, type 2 if no. Perfect, perfect, perfect. It's very simple. All we're doing is just reading the market. We're literally not doing anything else. That's all we're doing. And this, just reading the market this different way like this can completely shift your trading 180 degrees, simply just because you know where you are within the market. So for example, this trade right here, let's say we were to have this as our, well, not have it like this is just what it is. This would be our higher high. And then this would be our higher low. And then this would be our area of interest, which is the previous structure point. Boom. You guys are seeing how simple that is, how textbook, how whatever you want to call it. There's no reason to look for anything other than this. Trading is not supposed to be complicated. So now, how often does this come? Not that often. On one pair, it does not come that often. That's why I go look at multiple different pairs, because this same exact approach can happen here, can happen here, can happen here, can literally happen everywhere. Look, I just clicked that random chart and tell me that doesn't look like the example I've just been going over that I've been showing on the cells. Tell me this doesn't look like exactly what I've been saying. All right, is this bullish or bearish? Is this bullish or bearish? My boy Kenny's like, I'm not even gonna type. That's you, bro. All right, exactly. So we are bearish. So this would be lower low, lower high. So if this would be our lower high point right here, this would be our lower high. This would be our lower low. And then we'll mark this off as our area of interest. Are we 1, 2, or 3? There it is. You guys got it. You see how simple it is having a structure. Everything is a checklist. At the end of it, you guys will get the full checklist. You guys will get, I mean, I'm going to make it all the way to the end as best as I can, but you guys know we're not looking to take this trade right here because we're not at our area of interest. Once we get to our area of interest, we take the trade. If this trade does not get here, we don't take the trade. It just doesn't matter. It's not our trade. We move on to a trade that does have it and does make sense. And that's something that it takes experience, it takes psychology, dignity, fucking whatever you want to call it. Just you having that self-control and not taking this trade and waiting for these type of trades to pull up. It's literally that simple. But a lot of people overcomplicate it because they just want to focus on figuring out how to make this one happen. But you're not figuring out anything. You're going to make happen whatever the market is going to give to you. And if it's not giving it to you here, go to another pair that it is giving it to you. It's really that simple. It's not that complicated. Just for some reason, nobody says it, you know? People say, holy shit, you trade a lot of markets. No, bro, I don't. I literally trade none. I probably trade 2, 1. It's just out of all of these right now, this right now just looks fire. So if that makes sense, type 1. If no, type 2. Fire. I'm gonna try my best to get psychology in as well. I just want to make sure I get the pace in. You know, you guys are like with me, because once we finish one topic, moving on to the next one, like leaving the other one behind, you guys go watch the recording. Everything will be there, right? So we'll go back to, I don't even know. I think these are my top ones. So let's see. Let's test out another one. Are we bullish or bearish? You guys are seeing how simple and how clean it is now when you come look at it, right? All right. And are we 1, 2, or 3? All right. So it could be great. Exactly. Correct. So it's kind of the same thing as AUD JPY. It kind of already hit our area of interest and it's rejected, making it a 3. but technically it could be a 2 if you look at it because it's not out of area of interest, but it's a 3 because it already had the retracement into this area. So this is actually looking fire. I'm not even going to cap. There's a free trade for you guys. Wait for the pullback, get the bearish engulfing, and take the trade to the upside. It's probably going to be the easiest trade of all year right here. I'm going to put my little alarm. Remind me when to get in. All right, dope. All right, so how do you guys feel with the today's higher highs, higher lows, 1, 2, and 3? The next class that we get into, it is going to be area of interest. Because that's basically the next step. I don't want to bore you guys with a bunch of examples. Just go back, watch the recording, everything is there. And then the next class is going to be, how do we find these structure points the proper way? Because it's very easy to put them the right way, and then it can be very hard to put them up the wrong way. So I want to make sure I dedicate a full class to just